What's going on, everyone? We're going to take a quick look at the Fidelity calculator, and then we're going to take a look at the GameStop situation with the shares, because you saw the difference in the price action due to this, and that makes it, a reality when you're selling shares into the run. Obviously, it's going to create downward pressure. People are going to sell off, things like that. But that doesn't mean it's a bad thing necessarily, because again, when you sell shares, you're making money for the company, which is what they need right now. So let's go ahead and take a look at everything. So let's start with GameStop and the Fidelity calculator. And this is going to be for the 20th. And it's flipped the script essentially, right? We have, before we had a very high chance before the announcement of the shares, we had a much higher chance to close above the price where we closed at prior. But now we're seeing the opposite, and that's likely due to the obvious announcement of these shares. So from here, we're going to go look at this in more detail in a second. But first, I want to show you AMC, and I have not looked at this yet. I'm assuming it's going to be something similar. Check out the 20th. It's about a 50-50 chance, but slightly better than GameStop. So now that we have the calculator out of the way, it's basically a coin flip for AMC, and uh, for GameStop, it's basically flipped from what we saw leading up to this point. So now let's go and take a look at GameStop's filing. I'm just going to go straight to their website. And this is a S3 ASR. Now let's take the PDF. It's a registration statement. We also have a 424B5, which is the prospectus information, facts, events covered in both forms. So let's go ahead and take a look at the registration statement that was filed on the 17th. Up to 45 million shares of Class A common stock. So obviously, with the birth of assisted intelligence, we're just going to save this, load it into GPT-4o. We're going to make a new chat. Downloads here, and we're going to have this summarize the benefits and drawbacks of this document to shareholders. Cat, will you stop, bro? Chill out. Jesus Christ. I found this cat. It was like dying, fleas all over it. So I just picked it up and I took it home. It's the first time I've ever done that. Usually I wouldn't do that, but something about this cat was different. So now I have a poopsie. But let's take a look at this. So we're looking at the potential benefits and drawbacks from this decision from GameStop, and just to get both sides of the story. Potential for increased capital. That was the first thing I said is obviously it's a way to create revenue opportunity for the company. So 45 million shares. This is a significant capital, providing company with financial flexibility to fund growth initiatives, make acquisitions, and invest in new opportunities. It's always good to have cash, and that could also signify that GameStop, the company, thinks that there's about to be a downturn in the market, because usually when investors pick up cash and start holding cash on the books, uh, pretty bearish signal for the overall market. So strategic use, general corporate purposes, investment growth, enhanced liquidity, that is a huge benefit from it. And then we have professional management of sales. And that's through Jeffries LLC. They've been their long time underwriter now for quite some time. They were the ones that issued all the shares back in the 2021 through 2023 era. But let's take a look at the drawbacks, because that's what most people are going to be focused on. Obviously, the number one is going to be dilution. Now, obviously, it's going to increase the shares outstanding. So 45 million new shares will dilute the ownership percentage of existing shareholders. So that is a drawback, and it is a thing that happens. So it is what it is. It's obviously for a strategic purpose and for the overall purpose of getting more cash on the books. Market volatility, stock price fluctuations. Obviously, we just saw that the IV skyrocketed to, damn near historic highs. We're at 584% or something like that at the money for the current weekly expirations. They are expensive. So don't forget, IV inflates and deflates the price based on how high or low it is. Number three is the uncertain use of proceeds. The company has broad discretion of how to use the net proceeds. Well, that's what we're going to remind it. We're going to get the next document, the 3 ASR. We're going to give this thing to it. we will see if it can resolve that claim there. Find specifically what the use case for the proceeds is for. Okay, so we cleared up one of the drawbacks already. So the use of proceeds from the sale of securities as described in the provided documents is intended primarily for working capital and general corporate purposes. This includes potential acquisitions and investments in line with the company's investment policy, corporate purposes, again, acquisitions, short-term investments. The documents emphasize that there is significant discretion on how the proceeds will be used and that there is no minimum offering amount required to close the offering, making the actual total public offering amount, commissions, and proceeds indeterminate at this time. So again, that's saying that they could issue partial of the 45 and then close it out. It doesn't have to get to the full 45. So there's stipulations that apply here you're going to want to take into consideration before you just take everything you have at GameStop and dump it off, because there are a lot of things working here. So that's why I wanted to make this short video, just to ensure that everyone was aware, not to freak out completely. It does suck in some regards, but it's also, as we saw here, there is upsides and benefits to it as well. So take that into consideration. Y'all have a good one.